All right, ladies and gentlemen, thank you so much for joining me today. I'd like to go over the latest AML report by the SRA and talk about the most important stats and learning points that we should be kind of taking away from the report. Now, we've broken it down into various kind of headings, such as policy, strategy, oversight, supervisions, data on that, how many firms they looked at, what were the data on non-compliance, etc. Firm-wide risk assessments, which we've been talking about for a few years now, client and matter risk assessments, CDD and source of funds, policies, controls, procedures, and audits, sanctions, and so on. So let's go from the top and let's look at the key kind of learning points here. So UK continues to be a major global center for financial services, and as a result, we have a high risk for money laundering. Makes sense. An estimated of 100 billion or more is laundered through the UK or UK-linked corporate structures. Um, as long as we continue to open our property market and our business market to the world, we'll have this problem. So there needs to be at some point a give here where we're looking at properties and we're not letting anybody from the world just, to be able to set up a shop here and then buy it. But yeah, that's a huge problem as well. More than 4,500 organized crime groups were identified. Just to give you a scope, there's only 1,500 to 2,500 rectex globally, and there's double of that in organized crime in UK. Let's keep going over this. So these are just some basic stuff. Actually, we're just going to refresh this page quickly. And we're just going to go to supervision now. In the last year, SRA conducted almost around 1,000 supervisory engagements. And these engagements included around 300 on-site inspections, 500 desk-based reviews, and 71 thematic reviews, and 25 independent audits. The number of engagements increased by 72%, which is super impressive by the SRA. And we do have to give them credit. They have been really on point with how regularly they've been auditing firms. A total of 5,873 client files were examined during this period. Now, of all the firms they examined, interestingly, 270 firms were found to be non-compliant. So that's 30% of the firms. 1/3 were found to be non-compliant. And the majority of non-compliance came down to inadequate risk assessments, missing or ineffective client and matter risk assessments. I've been saying this for a while in all these webinars I do, which is majority of the fines in UK for law firms are due to ineffective firm-wide or client or matter risk assessments. And what do we mean with inadequate or ineffective? It just means they're not properly analyzing the different things they're doing during CDD and recording it down. There is a template, and you can follow the template, and you're gonna have to be analytical as a lawyer or as a fee earner, and that's not seen by the SRA in those cases. Now, in terms of firm-wide risk assessment, it is of course required. Only 47% of firm-wide risk assessments were rated as compliant, so less than half were good. 9% were fully non-compliant, and 44% were partially compliant. So there was some decent effort, but yeah, it's not looking good. A lot of firms don't understand what this whole firm-wide risk assessment is, and a lot of compliance consultants and people of influence say that is the most important document for a law firm. It's a doctrine that dictates what you do on matter and client risk assessments based on different departments and needs. Now, just a few other kind of data points to look at here. 19 firms had no firm-wide risk assessments. That's pretty brutal. They probably had no idea what it even meant, which is crazy because for the past, 5 to 10 years, it's kind of all you've been seeing in terms of talk points in AML. Now, common weaknesses included failure to tailor assessments to firms' specific services or client base. So, like looking at your client base demographics, segmenting them, and understanding which departments they're instructing on. And then, I mean, if you have the guidebook from the Law Society, it has a beautiful table that shows risk levels and what you should do on CDD based on different risk levels for each department. But that's a very kind of a generic template. What firms are failing to do is tailoring that based on their business. And as you can see here, there's an over reliance on generic templates. So you really can't just download a template and say, I've done it. You have to make it your own. You have to make it in house. And honestly, it doesn't cost a lot. You know, you can hire a compliance consultant and they can come in and make it an in-house kind of templated document for you. It might take a few weeks, a month or so, but it's worth it. Um, it's so worth it. Inadequate analysis of transactions, client risk, or geographic risk. So, what do we mean by that? You know, let's break down just geography. How well are you breaking down each risk point to do with the geography of your client, i.e., where's their headquarter based? You know, where their subsidiaries based. Okay, their headquarter, let's say, is based on a developing country. What's the risk score for that developing country? Where did you get that risk score? What is that risk score based on? Um, that's just one element, geography, right? So let's say funds, right? Let's say they pay with cash. What's the risk score on cash? What's the risk score with bank payments, pay slips, etc.? You know, you need to have everything risk scored. Each question needs to be risk scored, and that needs to be tailored to the department's level of risk with money laundering. So these are just some things to take into account. Um, these are just some stats you can read on my website. We're just going to skip over that. 78% of firms had completed risk assessments covering this, which refers to financing of weapons of mass destruction. Very interesting. Um, let's go into client and matter risk assessments. 16% of reviewed client files lacked any client or matter. That's quite a low number, actually. So it means firms are actually stepping up in filling in some sort of an assessment for who their client is and what is the matter that is being instructed on, what is the risk level posed by that matter, considering it's coming from this client. 39% of clients and matter risk assessment were found to be ineffective or incomplete. 5% of client and matter risk assessments contained incorrect risk ratings. Interesting. 135 firms, representing approximately 50% of non-compliant firms, were referred for further investigation due to failure in client and matter risk assessment. I mean, that's pretty big. 135 firms is a lot of firms. You know, I read a stat somewhere that there's 10,000 ish law firms in England and Wales, and outside, you know, let's say the top 1,000, everyone is like below 5 employees. So I do wonder what is the demographic and makeup of this 135. Is it high street firms? Is it London firms? Is it legal aid firms, property firms? I mean, it's got to be property firms. You got to imagine it's like a property firm in Grimsby or like Peterborough. Um, uh, so yeah, I don't imagine there'll be a lot of top 200s as well as kind of prominent firms there, though they do have fines, and we did see that in the news. Let's go to CDD. 6% of reviewed files lacked complete identity or verification evidence for clients. So 6% is pretty good because a few years ago, this would have been a lot higher. So firms are completely stepping up their game and adopting ID verification. So only 6% failed to have such things, um, or to have complete, I guess. 18% of files lacked proper documentation of the source of funds. Now, that's pretty tragic because you, when you look at it from a macro level, 18% of source of funds not being done or done properly, that's huge margins for letting criminals slip away. And not saying those 18% consist of all criminals and money launderers, but hey, one or two of those cases could have been something high risk or dodgy. So that's, I mean, source of funds is a very important basic. So I don't know how they've kind of slipped up there. 8% of files showed discrepancies between source of funds and financial ledgers. 90% of firms use electronic ID verification systems. probably third, fourth, Credus, something like that. Um, that's pretty big. That's a huge number, um, which is so interesting when you look at this data and you realize, okay, so they have technology for IDV, but for risk assessment and firm-wide risk assessment, it's like maybe those technology providers abandoned them. I don't know, you know. 30% of those firms formally test their electronic systems for accuracy or data reliability. Sorry, that's actually a pretty good stat. I'm really happy to know that there's a portion of law firms out there who are proactively uh, testing their own vendors and not just going with what vendors tell them. I could tell you, I used to use SumSub back in the day when I was a commercial director at RecTech. And when I used to do demos of SumSub, it couldn't even get my passport date of birth right on the demo itself. And it was really embarrassing trying to kind of say that was our KYC provider. So, yeah, you got to make sure your EIDV is actually working well and kind of testing that with different names, different ethnicities. Um, 40 and you, of course, for user experience as well, right? 41% of firms receive supervisory feedback regarding weakness in their source of funds control. So that's actually a decent number of firms being told, hey, you need to step up and here's how to step up. 20% of non-compliant files exhibited issues relating to source of fund checks. The SRA observed an increase in the use of digital onboarding and electronic verification, but also an increase in over-reliance on automated systems without human scrutiny. Yeah, you can't just dump the work on a paralegal and call it a day, my friend. You're going to have to actually analyze the data, make sense of it, and do due diligence. See, you these tools don't do due diligence. What they do is they provide you the facilities for you to do that. But if you give the job to a paralegal or a business support person, you're removing yourself from the equation of knowing your customer. So, thus, you're not doing due diligence. So, what SRA is really trying to point out here is you can't just rely on third fort and call it a day. You can't. As if it might have automated questions with conditional logic that draws them to a certain pathway, you still need to read the thing, right? And draw a risk assessment out of the collected information. Firms are required to identify and verify beneficial owners. Yeah. 823 firms, PCPs were reviewed, 300 were compliant, 382 were partially, and 130 were non-compliant. That's no good. Um, that's no good as well. So you really got to say a third were doing okay. The rest were kind of doing tragic. 77% of firms conducted internal AML file reviews, but 33% of these reviews omitted checks on source of funds. Very interesting. Okay. Um, just had a call. Sorry about that on my phone. Had to turn that off. 48% of firms carried out independent AML audits. Good job to those firms. I would say to the other 50%, hurry up. Like, you don't want to wait till FCA audits you. You want to audit yourself before that. Um, 32% of those audits were non-compliant, mainly due to inadequate or sampling or failure to include client files. Interesting. So, yeah, it's not looking too good so far. I mean, some of these stats are good. Like, a lot of firms are picking up EIDV tools, but then they're just not analyzing the data coming back, and then they're kind of just not putting in a risk assessment. And a lot of firms don't really understand PCPs and firm-wide. So it seems like there's a there's a gap in understanding what firm-wide does, and there's a huge portion of firms that actually just are not compliant properly with their PCPs. Anyways, let's go to some other kind of financial sanctions kind of stats and learnings. There's already conducted 432 sanctions related supervisory engagements, an increase of 8%. 47 of these were targeted sanction inspections. Of the 47 inspections, 38 firms were compliant, 2 were partial, and 6 were non-compliant. Very interesting. I mean, I don't personally find some of these stats as kind of striking because I'm more interested in kind of financial crime and risk assessments and onboarding and that kind of stuff. I'm just going to check the chat, make sure you guys are seeing this okay. Give me 1 second, guys. Sweet, guys. Let's keep going. So let's look at some enforcement and disciplinary outcomes. By the way, I do have a rough cold and a cough. That's why I'm not showing camera. And apologies for my coughs. So let's get back into it. The SRA recorded 137 internal enforcement outcomes, nearly double the 74 from previous year. In addition, 14 disciplinary outcomes were issued by SDT. Total fines from internal and tribunal actions amounted to nearly a million. Um, One fourth of fines were issued by adjudicators. 660K were imposed through regulators, and the SDT total fine summed up to around half a mil. Um, there's some stats on suspicious activity reporting, sectoral and thematic findings, property conveyancing remains the most exploited legal services for money laundering. Makes absolute sense. Trust and company services also present elevated risks. The SRA identified continuing trend of criminal exploitation of client accounts to obscure transaction origins. Thematic reviews indicated that smaller firms were more likely to have incomplete risk assessments and weaker governance structures. We were just talking about that. It, of course, makes sense. Makes all the sense in the world because smaller firms don't have the budget, they don't have the knowledge, they don't have the resources to know these things. So they really rely on kind of awareness and extracurricular time to spend on these. Larger firms generally demonstrated stronger policies and training, but sometimes weaker application at file level, which makes sense because holistically they would have a really strong setup, but then getting the fee earners and the paralegals on the ground level to know what the setup is like and what to do as a foot soldier essentially. That's the big challenge in banks, in big firms, in fintechs, and in any kind of large organization. Decentralized business modules, such as consultant based firms, pose heightened AML oversight due to dispersed supervision and also inconsistencies in the way it's done, right? So, Gunner Coke, I don't know too much about how their setup works, but if one partner consultant is doing things different to another vastly, then that's a problem, you know. But I would imagine they would have thought about how to standardize all of that. Technology, data, and emerging risks. So, increased adoption of digital onboarding and remote verification has created both efficiencies and vulnerabilities. So, SRA kind of looking at both sides of the coin, not just the side that RegTechs like. AI and deepfake technologies are being used by criminals to falsify identification documents. Now, I have this conversation with lawyers all the time about where does the risk lie? Is it in the ID? Are criminals faking ID and getting through, or is the risk on the source of funds, or is the risk on adverse media and screening? Um, a lot of people say it's on the funds. Usually, you use a mule with a legit identity, and the mule would have kind of their credibilities there, but the funds itself gives them away because it's harder to explain how that came about. Um, However, if you're not meeting your client, let's say it's a matter where you're being instructed overseas by a kind of a wealthy person from Hong Kong, right? Then at that point, you kind of can't just rely on whatever they send you electronically. You really want to make sure that you have verified that person and met them, whether it's a Zoom call, whether it's regular calls, notary, but then you want to verify the notary because the notaries could be fake, or then you could go to the notary and they could say, hey, that's not the person. I don't know that person. So you always want to kind of have plan B's, plan C's, plan D's on if plan A is kind of risky. Now, AI itself, I think, is a big fad. I've yet to see a great use case. I mean, Zapin is doing some cool stuff, generative AI, but really, when it comes to due diligence, AI can get you the stuff, but it can't read the stuff and make a decision on it, right? So that's where you need the human eye and the human mind to dig deeper and spot intuitive red flags. Not not all red flags are obvious and things that AI can read. There are companies I've spotted that I have evidence for fraud for, but the way I found that evidence was through a gut feeling of something that just didn't add up that AI could have never detected. Anyways, let's get back to the point. Firms must verify that electronic verifications are secure, accurate, and sourced from reputable providers. How do you do that? Tell me, as a so when you go to Thirdford, when you go to Smart Search or all these guys, you ask for their stats, right? Now they will provide you some stats on their accuracy, but how true is that? You know, anyone who's used the company that starts with the letter S knows that their screening data is as good as is not really good. I was gonna make a joke there, but I don't have a joke. It's not really that good. So if you're using that and the industry knows that provider provides inconsistent screening data, then like what are you doing? Like you're using false premise to run a due diligence check. You're using unreliable data providers. Um, I'm personally, this is where I fit in, right? This is where Aventine Lab fits in. What we're trying to do is educate the market on the difference between these vendors. And then, really, if we're being honest, we need a way to indicate this is the Waitrose, this is the Mark and Spencer's, this is the Asda, and this is your local corner shop. you know, it's rude. It's rude, but not all businesses are the same. In a virtual world where anyone could project anything, right? We need an indicator of actually, yeah, this tool is really cheap, it's really lightweight, and it's not going to be able to provide the facilities for a serious regulated entity like you, right? How do you know that? You usually know that 6 months after using a tool and getting frustrated and then leaving the contract. Well, what we want to do is run competitions between these tools. We want to interview compliance managers anonymously, and we want to be really direct about what is a good tool, what is not a good tool for law firms, how consistent are these screening results, what is a good KYC process like, who provides dynamic risk assessments, and so on. So that's where we come in Aventine Lab. We want to shed a light on these vendors and kind of categorize them and let law firms know what's best for them and what's really not best for them, if we're being honest. The SRA plans to deploy AI analytics in 26 to cross check AML compliance declarations across firms. I don't like that. I think SRA sometimes needs to wake up and have somebody criticize them, and I don't know if the people like that exist in SRA to tell them, hey, maybe this is not such a good idea, maybe we should have this checked out before we do this. um, this is one of those ideas that I don't think is good. um, to rely on AI to review law firm law firm declarations is just no. How about no? That's just liability. If the AI is no good, then we have a problem at our hand. I do not endorse this. I think this needs to be scrapped. As a regulator, if they are doing, we'll see with the FCA changes, but if they're still about doing something, bringing AI over humans into it is a red flag. Reliance on third-party technology vendors introduce additional cybersecurity and data protection risks. Yeah, no shit. I mean, this is literally what I said about deploying AI analytics to examine law firm declarations. No, you just like, yeah, vendor fraud, including interception of client funds during property transactions, remains prevalent. Really interesting, actually. That's a really interesting stat there. Firms are reminded that technology is a tool to support, not replace. Professional judgment and risk assessment and client due diligence should be reserved by the fee earner, by the person who's onboarding. So Kind of what we talked about. Tools can help you do the job, but they're not going to make the decision for you. And someone with an investigatory mind needs to use their mind and not outsource that element, basically. The SRA reported that firms with structured ongoing AML training had significant higher compliance levels. Just a logical thing there. 74% of firms provided sanctions training, and most provided AML refresher training annually. Pretty good. I guess the Fionas hate these. I mean, I hated compliance training when I was a salesperson, but um, yeah, it's got to be done. Common weaknesses included failure to record attendance, lack of tailored content for different staff roles, and minimal testing of knowledge retention. Now, I have some cool ideas to with this. You know, gamifying training is always a cool idea. I know there's some companies doing it, but I'm talking on a serious level, gamifying it and having scoring and all that good stuff. It is possible, probably more through like a learning, knowledge, and HR tool. But yeah, the SRA emphasized the importance of a strong ta. Sorry, the SRA emphasized the importance of a strong tone from the top, meaning that firm leadership must actively promote compliance culture. A lot of compliance consultants talk about how the culture of compliance is more important than just having it all recorded and written down, because and it goes back to law, right? We always, in my law degrees, this was a huge kind of point of debate, which is legislation is meaningless without enforcement or and proper implementation. So you can have it written down, recorded, and signed, but if it's not actually being enforced, then do you really have that law, like domestic abuse laws or, these kind of signatory UN laws where certain Middle Eastern countries are signed up to them, but not really kind of implementing them? All right, so there's some stats on communication, engagement, and guidance, forward outlook, future priorities. The SRA will continue to apply a risk based supervisory strategy, plan priorities for 25-26, targeted inspections of conveyancing and trust service providers. Ooh, if you're a property firm or a CSP kind of provider firm, watch out. They're coming for you. And how do you watch out? What do you do if you're watching out? What does that mean? Well, first thing first, map out some compliance consultants. There's a couple of them. You don't need to look too far. There's Kaylee, there's Layla, there's a bunch of them out there. There's Gavin Ball, or just on top of my head, right? Reach out to them, get your PCP sorted, get a couple of file reviews, get your firm wide looked at, audited. Um, and then what you can do if you're literally looking at vendors is reach out to me at Aventine Lab. What I'll do for you for free, we only kind of monetize our relationship with vendors because I want to help you guys for free here, and tech companies should really be kind of facilitating that to happen for us. So yeah, I'll basically map out your workflow on what kind of vendors you need, and we'll try to kind of make suggestions based on that, and then you can take it further yourself. Expanded monitoring of sanctions compliance. Listen, everyone needs to be, if they're kind of existing customers, they need to be sanctioned, monitored for sanctions. There's just no argument here. Continued thematic reviews of source of funds procedures. Yep, they'll continue looking to that. Uh, Integration of AI based data validation for AML. I don't like that. I've said this. I don't like that. Why are SRA bringing a fad into compliance? That's, to me, not the right move to do. Um, Overreaching lessons for law firms. So let's summarize this whole thing. And I do appreciate this taking a little bit long. It was meant to be a 30-minute quick overview, in and out, but yeah, apologies, guys. So AML compliance is now central to maintaining professional credibility and public trust. Kind of. Some top 200 firms have had huge AML fines. We're talking 250K. And they're still really working fine, to be honest with you. So it's like steroids allegations in UFC. It does damage your reputation, but yeah, it's not a life or death situation. Although you definitely don't want to be caught with it. It's a bad look, especially as a law firm. Regulators expect demonstrable understanding of risk, not just procedural formality alone. You need to demonstrate you get what we're talking about here with due diligence, and you use these kind of procedural tools and processes, I guess, to do that due diligence, right? It's not just, oh, I'm doing the EIDV, leave me alone. It's no, yeah, we do EIDV on everybody because we need to know every single person's ID, where they're from. Everything is risk scored. We need to cross reference that with the countries they're from. As a business, you need to be super slick about the data points you're capturing on your customers and how you're analyzing that to become a better lawyer and a practice, right? So just logical stuff. Data accuracy, audit trails, and documented rationale for decisions are as important as policy documents. Yeah. Um, Again, this is a huge talk points for a lot of consultants, which is if it's not written down, how can we know you did it? Or you know yeah, it's in your policy that you do it, but where's the proof that you did do it, kind of thing. Human oversight remains critical even as digital tools expand. I agree. This is especially going to be relevant for risk assessment. Again, if your risk assessment is automated, there is a question of, did you really do the risk assessment, or was it just automated by the system, and the system did the risk assessment? If the system did it, then are you really getting to know your customer, or is the system knowing your customer? Just some thoughts there, I guess. Senior leadership must take ownership of compliance strategy, not delegate it to compliance staff. I mean, when I speak to law firms, especially heads of departments, they're quite interested in talking about onboarding, time to onboard, UBO identification. Like when I speak to heads of property, they're quite actually they're quite well educated on these topics and want to improve. But then I speak to some firms where the fee earners are completely out of it, and they just have hired like a someone on 50, 60K, call them a compliance manager, and just dump the entire workload and obligation to them. And that's not that firm would not be getting it. They don't understand that compliance is not a department. It's embedded in your entire firm. It's embedded in each department, and it should be embedded in the way they work. Anyways, see, yep, regular training, active monitoring, and proactive remediation are indicators of a healthy compliance culture. Yep, I agree. Logical stuff. Firms that integrate AML sanctions and cyber security risk frameworks perform better in inspections. Yeah, the SRA's enhanced data-driven supervision model will increase detection of weakness across the sector. The direction of regulation is toward continuous, measurable, technology-assisted compliance. Cool. My key takeaways is a lot of the firms are still not compliant. And yeah, 270 firms were found to be non-compliant in general, and the majority of that was due to risk assessments, lack of proper PCPs or firm-wide risk assessments. So, and then conveyancing was still, if we do some conveyancing keyword checks, we can see here 73% of SARs submitted to the SRA was related to property. Conveyancing, the highest exploited department. So you gotta you gotta kind of, as a law firm, understand what your high risk departments, what have measures on a policy level have you put together to onboard various client types, and what you do during those various client types for onboarding. And then post onboarding, you need to analyze kind of the matter, the customer's particular instructions, source of funds, adverse media, all the kind of due diligence things that a firm is meant to do. And then you need to monitor that client. And then there's not a lot written here about perpetual monitoring, which is such as like your high risk and medium risk cases. You want to have a reminder to recheck them every 3, 6, 9, or a year, based on different periods. So, yeah, I highly advise firms to look at risk scoring every element of their risk assessment, such as their questions, such as the answers to questions, and getting your lawyers to have a sit down with like the team and having a brief together, reviewing the CDD file. So once the CDD file is done, get your team together and basically review everything. And that way, you can actually, as a team, understand that customer, and yeah, we can actually analyze it together and do the risk assessment and review that risk assessment together as well. But yeah, guys, that's my quick overview of the latest SRA report. I am a bit sick, so apologies for my coughs and little breaks here and there. But yeah, we'll do more of these. As soon as there's updates, we'll jump on, we'll go over some learnings, and we'll make comments, analysis, and so on for you. Thank you so much for watching this one, and yeah, stay tuned for the next update.